Well, good day, traders. I trust you're all well. Interesting market that we have. Today on Hang Seng. Well, all the markets are pretty interesting. I want to have a look at Hang Seng 50 and just talk about the present structure of. Let's have a look at the daily market, daily structure. We always start off by looking at the day and get some insights into the day. Now, the day is absolutely interesting because of this structure here. So before we had today, as we're at the beginning of the week, I marked off potential expanding triangle top. So when we say expanding triangle, we just think of a triangle, three-shaped structure like that, and it's expanding. So that's an expanding triangle. Anytime you see an expanding triangle, it is a potential reversal pattern, reversal structure. The market would likely reverse at either of the extremes. So up here, that's the bears will be selling, and down here would be a target for the bulls to start reversing the market. So I kind of thought, well, expanding triangle, opportunities for us in the market. And also what was interesting, I think we spoke about that last week, that one bar doji, whenever you see a one bar doji, you gotta look at the extremes. And if we have a chance to look at one of the other markets and see that as well. So coming off yesterday, you can see the day before, this was Monday, selling, bulls selling into the close. And you might wonder, hang on a second, bears selling to the close, bulls were quite strong. Where is the selling coming from? Well, if you always look to the left, on the day, always look at the previous 3 days. That's what I'd recommend. Look at the last 3 days, and then look at the structure that you're coming from. So all of this would have been telling you that anywhere near the highs is a potential selling zone, higher probability selling zone for the bears. And that's what happened with this inside candle. So inside candle yesterday and coming into the day, I kind of thought there might be a little bit of follow through selling. Of course, I didn't think it was going to go this far, but follow through selling at the open. Reason for that is inside candle at the top of an expanding triangle, failed breakout this particular day above the doji, above that previous lower high in March. So the bears that created this tail and that inside candle have a lot more momentum, at least for a little bit more selling. And today we've got much more. What lies ahead? Higher probability if today closes on its low. Okay, so which means you're going to look at the day tomorrow. If the day is closed on its low, which means the bears have had follow through and they have a good trend candle, then the momentum by the bears made higher probability to take them forward right down to test this big round number. 20,000 is a big round number in this market. Not only is it a round number which can turn out to be a level of support, in this case, or if we're down here, level of resistance, but also we've spoken about this for a long time. It's a 50% midpoint of the whole range of 2022, the high and the low. And it's also 50% of the all-time range. So everyone is watching that particular level. Can draw the market down as a magnet, and if you break beneath it, can pull the market up. But we are in a breakout mode. The bears, of course, want to sell all the way down here, and then the bulls, when you get down here, they want market to accelerate up. So going into the day, we have a look at coming into the day. So if you were trading this market, and I know some of you do at the open, a few interesting things which kind of correlate to the things that we talk about in the course, in the price action course. Before the day opens, I would have spent time looking at the US session to see if there's any insights I can get into the higher probability event taking place. It's the same market. So clearly you can see there was a bear breakout. There was a trading range, into the close. This was before the day opened. And at the low of the day, the bulls tried to accelerate up. So we had lower high double tops. That was a key bear level, lower high double tops. So clearly before this took place, if you just said that, you think, oh, well, the bears have a higher probability of selling, okay, based on what took place in the US session. So when you went into the opening session, bull breakout, good for the bulls. The question that was going through my mind is, okay, if the bulls are strong, then they're going to close on or near their high. And if they do that and they have follow through, then we have a bull breakout. Remember, the way to define a breakout, anytime you're looking at the breakout, is at least you got to see a candle breaking out of something. And best if it's a bull candle closing near its high, if it's a bear candle closing near its low. So, you don't have a dodgy candle or a huge high test candle. So you see that first, and we saw that. That's what I saw. Follow through from, this wedge bottom, follow through from that. And the bulls closed above this trading range here. So I figured, well, okay, the bulls are this strong. Then if they give us a follow-through candle, they have a bit of a challenge ahead of them. They have the midpoint of yesterday, which is an area of, in this case, would be an area of resistance, because the bears would not want the market to go above the 50% midpoint, because if it goes above that, then the market structure is changing, starting to favor the bulls. So if they are strong, they need to get above that. And we also have in that area, 50% extension of first candle and the measured move of the first candle. And if you look to the left, the bear breakout towards the end of the session. So this is all a huge sell zone. But before this candle came up, I'm kind of thinking, if they are strong, the bulls are strong, they'll give us a breakout candle, whatever, a follow-through candle, whatever the size, it doesn't matter. It doesn't have to be a huge candle, as long as it gives us follow-through. Then after that, I'll be looking for breakout pullbacks and maybe acceleration up. As it turned out, we had a micro double top and inside candle. Immediately, there's something wrong with the bull case. Okay, we are back within the trading range. So as far as the bears are concerned, this is just a continuation of the trading range. It's a failed breakout above the trading range. It's a decent enough reversal. So the bears will be thinking, well, okay, there's a breakout pullback, so maybe we should sell that. It's a lower high. At this point, the trade is, if you're taking that, it's a good second candle trade, but it's a low probability event, because the market might just accelerate up. So which means, based on the structure that you're taking, you need to have a measured move stop. All trades that I take at the open first, second, third, fourth candles, before I get a decent structure, are always measured move stops. So entry there, measured move there, which is also quite a proper technical level, because you're above the 50% pullback. Got triggered in on that third candle, because I just sold it as it was going there, got triggered in there. Then we got a bull dodge, and I was like, okay, that is not good for the bear case, because if the bears are strong, before we got this fourth candle, they need to accelerate below that. But when you go into the fourth candle, we've got 15-minute traders coming in, raw volumes may come in. This could fail. I didn't do anything to my trade at this point, because this was still, although it's a bull candle, it was not enough for me to believe that the market is going to come back and take out my stop. So left the trade in the market, and as soon as that started accelerating down, realized, okay, bears are taking off. They still, they had a problem selling beneath the bull candle, but a strong candle closing right at just above the low of yesterday, which was a bit problematic, because at that stage, the bulls had a chance to make it all fail, because the bears are strong. Why close right at the just above the high of yesterday. Why not below it? But they didn't do that. All I did at this stage is I then tightened my stop down to above the high of the first candle, because there was a chance that the bulls could just come back and reverse. That happens. You can see that when you look at enough charts. But in any case, this pullback was just to test the open. Okay, so the magenta line is the open of the day. So, the bulls did try, but all it was the perfect test of the open, then accelerated down. And at that point, you got to decide, if you're not in the trade, do you jump into the market or not? The next opportune moment for you to jump into the market, if you are scalping, you can just sell beneath a bear candle. Okay, I wouldn't have sold beneath here as a scalper. Some would have stopped up there, but best to sell after the breakout. So scalpers could have sold beneath this particular candle, and then they're going to hold on to their trades as much as they can. They might have exited here with the doji, because if you look at enough charts, when you see that kind of doji, it might just go up and test. But in this case, it didn't. If you're not scalping and you're waiting for a breakout pullback low one, which is one of the structures we look at, you would have been caught out here, because the market did not create for us breakout pullback low one. Instead, what it created for us is an interesting structure. It created, before we got this, a micro wedge bottom. Market went down once, bulls bought. Tried again, bulls bought. Tried again, bulls bought. So these three candles, 1, 2, 3, that is a micro wedge bottom. More often than not, when you see a micro wedge bottom or a wedge bottom, I mean, this one is a wedge bottom. So 1, 2, 3, it's pretty clear. Oh, there's a wedge bottom. You look for acceleration up. So even from a micro wedge bottom, there tends to be acceleration up, and maybe a lower high double top, and that you could have traded. But we didn't get that. Instead, this pattern failed. When a pattern fails, I was talking to traders who were in the market at that point. I said, when a pattern fails, what the market tends to do more often than not at the point of a failed pattern is to go for a measured move. The market wants to go for a measured move. So if you look at this measured move here, it could be here. Okay, that's the high of the pattern. That's the low of the pattern of this little pattern, the micro wedge bottom. And that's what the market did. The measured move of that is exactly here. That's where the market got to. So more often than not, if you start to look for where there's patterns that you're expecting to hold and the pattern fails, the market is likely to go for a measured move. The other pattern that was there is that right from the open, the selling, the tails, this bear breakout, the pullback started here. So if we just look at that, okay, so leg one, pullback, leg two, you could have started, or you always ought to start, at the high of the actual breakout, and you can see the market got there and failed, and went down a little bit more. You say, okay, maybe they're going for the full move, and they reversed at that particular point. Another structure comes into place after you've observed a pattern like this, okay, which is not your typical breakout pullback low one, which can carry on, but you have as a pullback another pattern that fails, then the market will likely just turn immediately. It looks like, hey, it's an immediate reversal, but what's taking place is that at the hidden levels of support, the measured move of the pattern that has failed, as well as leg one pullback, leg two. And if you look at this candle, this was a breakout candle. This was a follow-through candle. If the trend was to carry on right here, this would have been a complete candle, not a low test, and the bears could have sold off. But the fact that the bulls sold off bought into the end is an indicator of bullish strength. An attempt to reverse and failed, then you get, it's a micro double bottom. 1, 2, 3, and the market turned there. So quite a few things to look at if you go through this video again. When you start to look, where you expect a pullback, get a different structure. and it fails, expect the market to get to a measured move. So that's what we have for Wednesday, live trading profits. Thank you very much for taking your time. And if you are in Wednesday, the market, I will see you in 15 minutes. Marlon, thank you very much, boss. We'll see you guys next week. Take care and bye-bye.